Hi, thanks for taking time to look at this video. Today I want to talk about what happens at the end of a reverse mortgage. This is a question I receive all the time. I get this from realtors, financial advisors, I get it from clients, I get it from family members. It's an important question. I really want to dial in a little bit on this and the process of what happens at the end of a reverse. So there are really four different ways that a reverse may come to an end. One of those would be, of course, mortality. If both borrowers were to pass away, then the home is just a lien that needs to be paid off. That is it. There are no extra fees, there's no extra costs other than the cost of selling the home. And then you simply sell the home, pay off the reverse mortgage, and keep the remainder of the equity because it's yours, it's your home. Now, if family members are selling the house, they get to keep the equity, but I would be very careful in making sure that you design your will or trust appropriately so that the funds go to the people that you want the funds to go to. Second maturity event would be simply a mobility or a sustainability question. So if the house becomes more of a problem, in other words, if you have a major hip injury or possibly something else, another physical limitation that makes it more difficult for you to be in the home, then it may be time to sell the home. And you would really repeat the same process, simply sell the home, pay off the reverse, and then keep the remainder of the equity. The other would be simply refinancing. So you can refinance a reverse mortgage into a better or more equitable program. Maybe the rate's lower or your home value has increased. It could be several different ways, and it's usually cheaper to do it a second time. So we can talk about that. And as your reverse mortgage advisor, you're my client for life, so we're gonna have these conversations. And then the other piece would simply be selling the home, and maybe it's time to downsize. My own mom did that when my dad passed away. She was able to purchase a home with a reverse mortgage after actually even having a reverse mortgage. She still had enough equity in the home to be able to purchase her next home. So those are the four ways that a reverse mortgage typically has what we call a maturity event. If you have any more questions about that, feel free to reach out to me at the information below, and I'd love to explain more of that to you. Thanks again for visiting.